What moves Forex market? Welcome back to our journey into the fascinating world of Forex. Today, we're tackling the million-dollar question. What makes those currency values fluctuate like a yo-yo? Buckle up, because in the next few minutes, we'll break down the key forces that drive the foreign exchange market, also known as Forex. Imagine Forex as a gigantic marketplace, a bit like a digital bazaar, where people from all corners of the globe buy and sell currencies. Just like any marketplace, the price of a currency hinges on supply and demand. But what exactly affects that supply and demand? Here's where things get interesting. The first big player is a country's economic health. Think of it like a brand you trust. A strong economy with low inflation is like a well-established brand. People want more of it. So, currencies from countries with robust economies and stable inflation tend to be stronger. That's because investors have more confidence in those currencies holding their value. Now, let's talk about interest rates. Central banks, the big financial institutions that keep a watchful eye on a country's economy, play a crucial role here. When they raise interest rates, it's like waving a shiny flag to investors seeking higher returns. This increased demand for that country's currency, just like a surge in demand for a hot new product, can push its value up. Next, we have international trade. Countries are constantly buying and selling goods from each other. Imagine this like a giant global yard sale. If a country exports more than it imports, think of them selling a lot of stuff to other countries. It creates a demand for its currency. Why? Because other countries need that currency to pay for all those amazing things they're buying. This increased demand can lead to a stronger currency for the exporting nation. Political instability is another factor to keep on your radar. Surprise elections, unexpected conflicts, or any kind of political turmoil can spook investors. They might start to see a particular currency as risky and decide to park their money in a safer place. This sudden shift in investor sentiment can cause the value of the affected currency to weaken. Finally, there's a bit of an X factor at play, Mr. Market's mood. Just like with stocks, the overall feeling in the market can affect currencies. If everyone is feeling optimistic and bullish, they might be more willing to buy a particular currency, pushing its price up. On the flip side, if there's a wave of negativity, investors might rush to sell, causing the currency's value to dip. The Forex market is a complex ecosystem, and these are just some of the major forces shaping it. But hopefully, this breakdown equips you with a solid foundation to understand why those currency gyrations happen. Remember, the more you learn about the factors influencing Forex, the better you'll be able to navigate this dynamic and exciting market. So, there you have it, folks. The next time you see a news headline about inflation or interest rates, you'll be able to connect the dots and see how it might influence the ever-shifting world of Forex. Happy trading, and until next time, keep on learning.